What is going on, guys and gals? Good morning, good evening, good afternoon. Welcome back to the channel. And in today's video, we are going to be breaking down how to increase your strike rate. One of the biggest problems that traders face is they get in and out of positions too frequently. They don't wait for specific types of confirmation and they get chopped around by the markets. And this is 95% of traders. So in today's video, we're going to break down how to be picky so that you increase your strike rate, so that you get better confirmation on your entries and you wait for that confirmation, which will overall improve your profitability and make you a better trader. So with that being said, let's get into it. Now, today I want to kick things off with this Hype daily chart. Now, I recently took a trade on Hype, and this is an unbelievable example of how waiting for confirmation increases your strike rate. Now, I had this on weekly watch list here. You can see here on the daily time frame, we had this bearish engulfing close directly into support and resistance around 62,660. A little bit of a bullish inside bar forming. Wasn't formed at the point when I took the trade. It was forming. So I was looking at this and I'm looking for signs of deceleration. No trade yet. No entry for me. There's nothing to be done yet. We're observing right now. And this is the part of the process where people want to do things like set limit orders and prematurely get into the trades and things like that. And that is not conducive to you having a higher strike rate. It doesn't increase your win rate. What it does is it gets you in and out of a bunch of positions prematurely. You get chopped around and you end up either closing, getting stopped out and losing money. So nothing to be done yet. Bearish engulfing close into the daily 50. Daily 50's had some good respect in the last few weeks. We can see here that price on a higher time frame basis is actually making higher lows. So you can see here we've got a higher low, we've got a higher low, we've got a higher low. A little bit of a range here between sort of all-time highs up around this 75,800 region and the SR at 62,660, which has been respected and reacted to on a couple of different occasions. So higher time frame analysis, lower time frame execution, nothing to be done just yet. On the 4-hour time frame, you can see we had price coming all the way down to here. Now this is the daily close, which is the bearish engulfing, which sends us into this support and resistance level. This is what we just looked at on the daily time frame. We then had a little bit of deceleration here, and I'm going to pop this across into multi-time frame screen share because I want to see exactly where my entry is, which is here, right? Or on this 4-hour candle close here. So we can see here we had a little bit of deceleration and price bounce. We are reacting to that level. Still nothing to be done just yet. We're just watching and we're observing. Now, again, we pull this multi-time frame screen share up. We've got this candle right here. So that bullish engulfing close, we're going to put an arrow underneath it. This bullish engulfing close on a 1-hour time frame right there is where our entry occurred. Now, if we start stacking a few pieces of confluence together, what I'm doing now is I'm now looking for a lower time frame entry with a higher time frame analysis, specifically on the 15-minute chart. So let's blow this up and have a look at it on the 15-minute time frame. So we can see here on the 15-minute time frame, we had what I like to call basically a holy grail setup. So we had these two equal lows here on a 15-minute time frame. One of them is slightly sweepy. So we've sort of swept this previous swing low here with this candlestick formation here. We had a bearish engulfing followed by a bullish, pretty big bullish inside bar, followed by a bearish engulfing with a bullish low test, rejecting this level. So I'm getting lower time frame confirmation of my higher time frame analysis, which is that I'm expecting a bounce at 62,660. I'm getting some multiple confluence factors starting to stack here, which is making me want to look for an entry to get into this position. Now, my first point of entry for this is going to be marking out these highs here, waiting for a break of structure on the 15-minute time frame, the confirmation of a higher high where I would look to get into this position. Now, I did not get into this position right here, and I'm going to explain why. And this is the thesis for today's video on how to increase your strike rate. I wanted to see a couple of things in order for me to enter. One of those things is high volume. We did not have high volume. It was at 9 o'clock in the morning here. I'm in Dubai right now, so 9 o'clock in the morning Dubai time. It's pre-London. It's a bit early. There's no volume in the market right now. You can see here on my volume indicator down here, we have no volume. It's very low. So that's one of my prerequisites to taking this sort of breakout trade, if you will, is that I want to see a volume spike, and we don't have that. So I'm cautious. I'm not ready yet. I've got my hazards on for the time being. Then you can see we rejected this level here. We closed as a bearish inside bar, and then we bled out back down into this little, I mean, you could almost call it a 15-minute range, into this little 15-minute range here. And we sat in that range for 7 hours. Okay. So this is the fundamental difference between being trigger happy and gung-ho and being selective. And being selective increases your strike rate and increases your profitability. So I did nothing. 7 hours, sat there and did nothing. Now, later in the evening, we had CPI news release come out of America. Much better inflation numbers than were anticipated. Way, way, way down on inflation, like 10% less than the forecasted rate. This is good for risk markets. Inflation coming down, good for risk markets, good for crypto. Crypto responds very positively. And what do we see here? We see a breakout of this consolidation. And that's why I've got this horizontal line drawn in here above this swing high. I'm happy to sacrifice a bit of risk to reward here in order to get confirmation that we are making yet another higher high. So when we come up here and we break above this bullish engulfing, this bullish swing high here, we now have this bullish engulfing close giving us a new high. This is confirmation. This is the additional layer of confluence that I want to see in order to get into the position, because I now know that this range bound price action, which we've sat in for the last 7 hours, has now been invalidated. I have a very clear indication of where I can get into this, and it's right there. So I took this trade on a 15-minute time frame about 2 or 3 seconds before the candle close, which is why my entry is slightly underneath here. Stop loss, I went below this range bound price action. Now, there's a very specific difference between stop loss and soft invalidations, which I can cover off in another video. But for the purposes of this video, stop loss underneath here, entry there, profit target. We can jump back across onto the 1 hour time frame here, which we will put the risk to reward tool on. Stop loss underneath here, as I mentioned, profit target up here at the $72 region. Now, why do I have my profit target there? Well, we just covered off on the fact that we're in a little bit of a range. We've got the top side of the range, which is these all-time highs up here, and we've got the previous daily swing high. Now, although this is somewhat messy from a daily perspective, you can see here we're making higher lows all the way up, which is great. We are also making lower highs on a daily time frame. So price is being somewhat squeezed in this daily time frame there. So I don't want to stretch my profit target here, get greedy and target here for a full TP if I don't think we're going to have enough momentum to get there, which I don't have confirmation of yet. So I want to see confirmation that that momentum is going to carry us higher. So my first trouble area from where I'm expecting price to react to is this $72 region right there. And that's where my TP is. So you can see that evident on the daily time frame. Let's see, we're down here on the 15-minute time frame. Now, the reason that I'm making this video and what I wanted to illustrate here is how to increase your strike rate. One of the ways in which I increase my strike rate is to wait for additional confirmation. If I am not sure about a trade, if I want to see a little bit more, if seeing a little bit more is going to sacrifice my risk to reward ratio, as long as I can still get good risk to reward, which I can, it's 5.3R. If you're risking 1% of your account, 1 to 2%, as most people should be doing, that's 5.3%. If you're risking 2%, it's 10% return. It's a great return. Don't need to get greedy. I don't need to try and optimize my entry and have a more aggressive entry here. It's cool. I've still got good risk to reward in this position. It's still a good entry. I've still got a clearly defined area of where I'm wrong. So how do I increase my strike rate? I do that by not allowing my egotistical brain right there, when I see the small first signs of a breakout, to get me into that position. Because let's say that I entered this position on a break above here. My stop loss is probably going to be maybe underneath this drive candle, maybe at the downside of here somewhere. Let's be super conservative and say that I put it there. If price retraces all the way down into here, if I've got a soft invalidation in place, i.e. loss of this level, then I'm already out there. Manual close, bang. Potentially even after chopping around here, bearish engulfing, manual close, bang. So I would have been in and out of this position in about an hour for maybe minus 0.5, maybe even minus 0.7, depending on how I held it. Then I would have watched that candle, and now my emotional brain is coming back online. I didn't wait for confirmation. I didn't have multiple confluence factors stacking together. Therefore, I'm diminishing my strike rate. I'm reducing the amount of the amount of risk to reward on this position, because there's a chance that it's going to cloud my judgment to re-enter it at the opportune entry. So what I'm saying is, in order to increase your strike rate, sometimes it's good to wait for confirmation. That's how you increase your strike rate, is you wait for confirmation. You wait for the market to show you its hand, and then you respond to the market's hand. Doesn't matter what style you trade, doesn't matter how you're doing it. It's always best to wait for more confirmation. It improves your strike rate. It reduces the frequency of you overtrading, which everybody, whether they care to admit it or not, has overtraded at some point in their trading career. You don't want to be overtrading. And one of the ways to stop that is to increase your pickiness, increase your selectiveness, your criteria for entering a position. That's also how you improve your strike rate. That's also how you reduce your emotional fluctuations, because instead of getting chopped around in all this nonsense, you've got a clean entry. Now, we can talk about some management of this position. My stop loss is rolled on this because price has been in a nice 1 hour bullish trend all the way up to here. Then we started to put in a little bit of a reversal pattern, bit of a head and shoulders pattern. You can see this arrow right there. That is when I closed approximately 25% of the position on that bearish engulfing candle there. My stops are rolled on this, so there's no risk on the trade for me anymore. I'm waiting to see how we respond to here. We're decelerating at these lows around here. We do have a little bit of a 4 hour retracement, as you can see on this screenshot here. So there's an argument that we could be forming an inverse head and shoulders pattern here, which, if you don't trade head and shoulders patterns, looks something like this. So I would like to see, are we going to decelerate here and push back up? If we come up and make new highs, it should be game on, but we don't have confirmation of that yet. So I've TP'd 25% of the position, stops are rolled, I've got no risk on the trade. My emotional fluctuations on this are non-existent because I've entered properly. I've managed it properly. I've waited for confirmation, which, although it diminished my entry a little bit, it gave me more confidence in the position and the likelihood of that impulsive move, right? One of the other things I mentioned before was volume. Look at the volume around this CPI news release. Great volume, positive fundamental news, complementing the crypto markets, i.e. inflation coming down, 15-minute bullish engulfing close above the level that I want to see, volume spike right around New York Open. Happy days. Sometimes you got to be selective. Sometimes you got to be picky. Now, this is exactly what we teach inside Quantum Traders, is for you to be picky, for you to be selective, for you to improve your strike rate, reduce the amount of overtrading that you're doing so that you can optimize your trading and become more profitable. Because you're in the trading business to make money, not to overtrade, not to make stupid mistakes, not to make the same mistakes. You're treating your trading like a business instead of like a hobby. And if you're treating it like a business, you should be looking for ways to refine and optimize that business. And one of the ways you do that is to increase your strike rate. And the way to do that is to be pickier and wait for confirmation. If you're a little unsure, if you're uncertain, waiting for confirmation costs you nothing and has the potential to dramatically improve your trading. So that's all for this video. You guys and girls take care. I'll see you in the next one. Happy trading, and let's get it.